But with just 19 days to go to the election day, investors are scratching their heads wondering which path to take with their portfolio ahead of the big finale. My next guest says what he has is the perfect roadmap for your money. Let's bring in Chief Equity Investment Officer at Eaton, Vance, Perkin. $300 billion in assets over there. Let's walk us through both scenarios, and I want to start first with hypothetically, a Trump victory. What does it mean for the markets and for investors?
Yeah, I think the initial reaction of the market would be to sell off. I think Wall Street doesn't like uncertainty. That would be unexpected. There'd be fears of a trade war. There'd be fears of what it meant for the dollar. But like with, I think the roadmap would be Brexit, which is you'd get a short sell-off, and then I think money would come into the market and want to buy the market at that point. I think long-term, his proposals might actually be pretty good for the market. I think we'd have corporate tax reform. We'd have infrastructure spending. I think that would be good for the economy.
Glad you brought up the Brexit analogy, because we had a horrifying day post-Brexit, and then since then the FTSE has hit multiple highs.
That's
so,
right.
You know, the European stocks haven't, at least the British stocks haven't done that poorly. Now let's turn to Hillary Clinton and imagine that that's a presidency that our investors see. How should they play that?
Right. I think it depends the margin of victory and whether she pulls the House of Representatives along with her own victory. If it's a split House, then I think the Republicans will be a check on the more progressive positions she might take. It'll be largely the status quo, what we've all become used to over the last several years. You might have some minor areas of compromise. Again, corporate tax reform, fiscal spending, things like that. If it's a more sweeping victory, then I think you have to worry about healthcare stocks and some of those parts of the market that might be under regulatory scrutiny.
Yeah, I keep hearing that continually. So now I look at those two things, and we've covered this for so long together. There are so many other issues that could hit the markets. Earnings. Crude oil seems to, on any given day, control what happens with the markets. There's econo data right and left. We got existing home sales today. They were better than expected, but we saw first-time jobless claims ticking slightly higher. That's not great. So which ones of those issues really tend to work for or against a portfolio?
I think the main thing in all of that is there are all these conflicting data points, and you have to kind of set them aside and look out over the longer term, which is what we try to do at Eaton Vance. So we're focusing on companies that can win over a full market cycle. So we like companies in the industrial sector. We like well-capitalized banks where there's some good value. I think you don't want to get hung up on any one data point and kind of look through the noise for the longer-term outlook for these companies.
One of your picks is Rockwell Automation. I was looking at it. While it's up 12% year over year, it's got a great dividend, 2.5%. So you're getting paid.
Good dividend. They're growing. High returns on invested capital. They have real intellectual property in their business. It's a play on capital spending, which has been missing from the economy, but I think at some point we'll get that. It's a quality cyclical industrial company that I like.
And when you summarily throw out the term, I like certain banks. This one's interesting. First Republic. This is not the Morgan Stanley or the Goldman Sachs. This is a very interesting bank that does sort of high-end, you know, really good VIP treatment for a lot of their customers. And with a backdrop of Wells Fargo not doing that, First Republic, you say, is the one.
That's right. They're a mid-cap regional bank. They service the higher end of the market. They're high-touch, high-service, pristine credit quality, well-capitalized. It's had a good run, but it pulled back recently on earnings, and I think for a long-term investment, it's a good one.
Well, the markets are pulling back just slightly here with the Dow down 30 points. It's great to see you, Eddie. Eddie Perkin.
Good to be with you.
Of Eaton Vance. Nice to see you.